Paul Tudor Jones is widely recognized as one of the most legendary figures in the world of investing. Throughout his long career, he's built an extraordinary reputation for his ability to predict market trends with remarkable accuracy. As the founder of Tudor Investment Corporation, Jones became a household name in the finance world during the 1980s after correctly forecasting the infamous Black Monday crash of 1987. While many investors suffered catastrophic losses during that period, Jones not only anticipated the crash, but also positioned himself to profit from it, solidifying his image as one of Wall Street's sharpest minds. His exceptional foresight during that time became a defining moment in his career and helped shape his approach to macroeconomic investing for decades to come. Today, Tudor Investment Corporation has grown into a global powerhouse that manages billions of dollars in assets across various markets. The firm's portfolio spans a wide range of investments, including traditional equities, alternative assets, commodities, currencies, and even venture capital. Because of this broad diversification, any movement or adjustment made by Jones or his firm tends to attract the attention of other professional investors, analysts, and everyday traders alike. Many market participants study Tudor Investment's quarterly filings to understand where Jones is placing his bets because his strategy often provides valuable insight into the broader market direction. According to Tudor Investment's most recent regulatory filing, the firm made a significant change during the second quarter. It completely exited its position in Palantir Technologies by selling 175,212 shares. At the same time, Jones established a brand new position in Rigetti Computing, a much smaller and more speculative company focused on the rapidly evolving field of quantum computing. In total, Tudor Investment purchased 905,700 shares of Rigetti, marking a bold move into one of the most experimental areas of modern technology. When an investor as experienced and influential as Paul Tudor Jones decides to sell out of a well-known artificial intelligence stock and reallocate capital into a risky quantum computing company, people pay very close attention. Such a dramatic shift suggests that Jones sees something deeper happening beneath the surface of the market. To fully understand his reasoning, it helps to examine what might have motivated these moves and whether following his lead makes sense for other investors. Palantir Technologies has been one of the most closely watched companies in the software and artificial intelligence space over the past several years. Initially, Palantir was primarily viewed as a government contractor that depended heavily on large but unpredictable contracts with various government agencies. Many investors once saw it as a niche data analytics company without consistent or reliable revenue streams. However, that perception has changed dramatically in recent years. Through a combination of strategic innovation, aggressive expansion, and successful rebranding, Palantir has evolved into a global software leader that integrates artificial intelligence into a wide variety of sectors. Today, Palantir's technology is used across defense, healthcare, logistics, financial services, aviation, and many other industries that depend on complex data management. The company's transformation has been largely driven by its artificial intelligence platform, which is built on top of its existing Foundry, Gotham, and Apollo systems. This platform has allowed clients to harness artificial intelligence in practical and scalable ways, making Palantir's software more attractive to large enterprises seeking efficiency and data-driven decision-making. As a result, Palantir's business fundamentals have improved considerably. The company has transitioned from being viewed as a government-dependent contractor to being seen as a consistently profitable software company. It now generates strong free cash flow and has achieved positive net income. This financial improvement has fueled enormous enthusiasm among investors who see Palantir as one of the most promising long-term artificial intelligence plays. That excitement has translated into massive stock gains over the past year as investors rushed to gain exposure to what they view as the next major frontier in technology. However, as with many success stories in the stock market, extraordinary performance often brings with it extremely high expectations. Palantir's valuation has risen to levels that some analysts view as disconnected from its actual business fundamentals. The company now trades at very high price-to-sales and price-to-earnings multiples compared to other software-as-a-service companies. These elevated valuations imply that investors expect Palantir's growth to continue at an exceptional pace, leaving little room for disappointment. For an investor like Paul Tudor Jones, who is known for identifying turning points and capitalizing on macroeconomic trends, holding on to a high highly valued stock that may have already peaked in enthusiasm might not make sense. His approach has always emphasized understanding when a market narrative has reached maturity and when it is time to move on to the next opportunity. From that perspective, selling Palantir appears to be a strategic decision to secure profits from a stock that has already achieved substantial gains while reallocating capital toward an area that has much greater upside potential. That brings us to Rigetti Computing. Unlike Palantir, which is a well-established and profitable company, Rigetti is still in the early stages of development. It is considered a pure play in the quantum computing space, which is a revolutionary field of technology that aims to surpass the limits of traditional computing. Instead of using binary bits that represent either a 0 or a 1, quantum computers use qubits, which can represent multiple states simultaneously. This unique capability could theoretically allow quantum computers to solve problems far beyond the reach of even the most powerful classical computers today. Some industry experts believe that the combination of quantum computing and artificial intelligence could eventually create a market worth around $10 trillion over the long term. This massive potential has attracted the attention of investors who are searching for the next major technological revolution. However, despite all the excitement surrounding quantum computing, the industry remains highly speculative. Rigetti currently generates very little revenue, continues to burn through large amounts of cash, and has yet to demonstrate a clear path to achieving commercial success on a large scale. On the surface, this might appear to be an odd investment for someone with Jones's disciplined approach, but it is important to remember that Tudor Investment is not a typical asset management firm that simply holds long-term positions. Instead, it operates as a hedge fund that thrives on identifying and exploiting moments when markets are likely to shift direction. This means that Jones may not see Rigetti as a long-term holding, but rather as a high-risk, high-reward trade that could deliver significant returns if a certain event or catalyst takes place. One possible catalyst could come from updates on Rigetti's Anka 3 and Cepheus 1 systems. If the company announces progress that shows it is closing the gap with competitors such as IonQ, D-Wave Quantum, or Quantinuum, that could spark a surge of speculative buying interest in the stock. Given the growing investor excitement around quantum technology, even modest advancements could trigger substantial price movements. Jones has built his career on identifying such moments before the rest of the market does. It is entirely possible that his decision to invest in Rigetti reflects an attempt to get ahead of a potential wave of institutional investment that could flow into the quantum computing space as the technology matures. Selling Palantir and buying Rigetti may seem like opposite decisions, but in reality, they fit together as part of a single coherent strategy centered on capital rotation. Essentially, Jones is locking in profits from a mature artificial intelligence stock that may no longer have much short-term upside and redirecting a smaller portion of capital into a sector that could deliver outsized returns if it experiences even a small breakthrough. It is also worth noting that Tudor Investment's position in Rigetti includes both call options and put options, meaning the trade is structured with built-in risk protection. This shows that Jones is not making an all-or-nothing bet, but rather a carefully balanced move that allows for potential upside while limiting downside exposure. This approach is consistent with his long-standing reputation as a sophisticated trader who prioritizes risk management alongside opportunity. For the average investor, the situation looks quite different. Palantir remains a strong, profitable company with deep connections across both government and private sector clients. Its artificial intelligence software continues to see growing adoption, and its financial position remains solid. Rigetti, on the other hand, is a speculative company that is still several years away from proving its commercial viability. While the potential rewards from investing in a company like Rigetti could be enormous, the risks are equally significant. The key lesson from Paul Tudor Jones's portfolio adjustments is that even billionaire investors frequently reposition their holdings to balance potential risk and reward. For most individual investors, it may be wise to reduce exposure to stocks that appear overvalued, such as Palantir, especially after large rallies. However, diving into extremely speculative opportunities like Rigetti should be done cautiously, and only by those who are comfortable with high volatility and the possibility of losing a substantial portion of their investment. Essentially, Paul Tudor Jones, one of Wall Street's most respected investors and the founder of Tudor Investment Corporation, recently made a notable shift in his portfolio by selling all 175,212 shares of Palantir Technologies during the second quarter and purchasing 905,700 shares of Rigetti Computing, a speculative quantum computing company. Jones's decision to exit Palantir, which has become a profitable leader in artificial intelligence software, but now trades at extremely extremely high valuations likely reflects his preference for identifying new opportunities before they become mainstream. By rotating capital from a mature artificial intelligence company into a high-risk, high-reward quantum computing play, Jones may be positioning himself ahead of potential breakthroughs in the next generation of computing. While his Rigetti investment is hedged with both call and put options, making it a carefully managed trade, the move underscores his talent for anticipating market shifts. For most investors, however, Palantir remains a stronger and more stable long-term option, while Rigetti is suited only for those willing to handle extreme volatility and uncertainty. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.